Hey, Karl Bryan coming at you. Today I'm going to talk about the problem with profit. By the way, I'm here at the beach, voted #1 beach in the world. Check that out. So, my mountain bike, riding this bad boy, about to jump on. So, the problem with profit, otherwise known as the bottom line, what happens is a business coach or a business operator, and in some cases an accountant, will look at a company and then they assess what we refer to as the bottom line. Okay? What's the problem with the bottom line? What's the problem with profit? And that is that if I look at an income statement, profit and loss statement, same thing. Okay, basically the way it looks is that there's revenue along the top. Okay, there's expenses along the bottom. You subtract the two, and then you end up with the bottom line. That's profits. It's actually a cost of goods sold in there, but I don't want to, for my non-accountants, my folks that understand financials, I don't want to make anything any more complicated than this. It's very important. Okay, so what they do is they look at the bottom line. And again, you've got revenues, and then you've got expenses and a profit and loss. You subtract them, and then you end up with your bottom line, okay, your profits. Well, okay, two companies. Okay, one company has got revenues of 20. Okay, they've got expenses of 10. Okay, now what is their bottom? What's the number that you would circle at the bottom of the profit and loss? The answer is 10, right? Got profits of 10, real simple. Revenue, profits of 20. Profits of 20, the revenues of 20, expenses of 10, and their bottom line is 10, and that's the number. So you go in there and you're like, oh, this company can really afford my high-end coaching fees. Profits at 10, they're good. There's another company and they've got revenues of 1,000, and then they've got expenses of 990. What's their profits? 10, right? Are these, without knowing what these companies do, without looking into anything else other than their revenues and their expenses, do they have anything in common? Which company would you rather own? Which company is a little bit wobbly, a little bit vulnerable, and which one is on solid footing? Well, hopefully you guessed the company with revenues of 20 and expenses of 10 and profits of 10 versus. So, which one? And this is the problem with the bottom line. An example, like you could have a company, and last year, let's say I talked on recently about margin and the importance of it in a vid. So, like let's say they had a truck and they sold it last year, right? Well, the revenue from that truck is going to end up in their financials. So the question is, next year, like you could go and assess this company and the bottom line and then not realize that, they're not nearly as solid as they appeared. Although they were profitable, they sold a truck last year. They sold machinery last year. They sold assets last year. They sold a piece of land last year. They sold some real estate last year. So without understanding, so the solution, if the problem is that you look at the bottom line and can assess it improperly by not knowing what I just described, what's the solution? The solution is that you gotta be able to read financial statements. And your financial statements would tell you what, and there's only 3 of them, so don't get confused or intimidated, because frankly, is easy. I don't say that it's easy. It's something you gotta learn. But it's not that complicated. It is not that complicated. There's only 3 of them. There's a balance sheet, profit and loss statement, and the cash flow statement. And as an example, where you would find the solution, like, you know, that truck, you want to be able to read a cash. I would say less than 10% of business owners have a cash flow statement. A lot of them wouldn't even know what that is. Like, it's almost like the terminology would confuse them. And oh, here, big waves today. Oh, my bike just changed gears. What are you doing? The ocean, sand, salt water, very bad for bikes. Very bad. You notice I'm not riding my mongoose. This is Gladiator. It's a piece of crap. But ironically, it gets me around better than my fancy mongoose. Don't tell Mongoose my sponsor. He'll be upset. Oh, look at that. So anyways, being able to read financial statements, if you looked at a cash flow statement, you'd see that there's 3 types of cash flow. I'll talk about that in another vid, no doubt. But the most important thing that you need to understand, debatably, one of the most important things you need to know about business if you want to be uber successful. And when I say successful, not, oh, I built a 7-figure company. You know, we surpassed 2.5 million. Not that horse bucky. But you could do that and lose money. You could do that and have really, really slim margins, like our friends with revenue of 1,000, expenses of 990, and they got profits that may look good in the business world because they sound good to the uneducated. But to those of us that know, there's nothing exciting about it. It's actually a really vulnerable company. So operating cash flow. Here's some folks doing it. The beautiful people in this world. I ain't one of them. My big nose. I want to say hi. Say hi, guys.
Hey, how you doing?
Here's our models. So, that's all I got. So you need to learn. Don't, bottom line, be careful. A real mentor can tell you what not to do. God bless.